Hi there, welcome to this water cooler. Today we're going to discuss if you're thinking about selling in 2025, what you really need to do to prepare and whether now is the right time to potentially consider a sale. I think the first thing that we should discuss is business asset disposal relief. So we had a crazy end to 2025 with obviously business asset disposal relief going from 10% to 14% and a lot of vendors choosing to negate paying that additional tax. Now, of course, business asset disposal relief will go up to 18% on the 5th of April. So what can people do to kind of plan?
Yeah, well, I think first of all, to cover a few points, is because I think there was a bit of a misconception this year that the rate of capital gains tax changed at the beginning of April, and it didn't. It was just that changed when Rachel Rees spoke in the House back in October, November time. So the actual difference was the change in business asset disposal relief, which was 40 grand per individual. Now, it's easy to say 40 grand per sale, which was the impact, but of course, if you've got a spousal relief, if your husband and wife shareholders, then it may have had an £80,000 impact on you. But I guess for a lot of people, it's about understanding what the impact of that is, because we had a lot of bigger practices who got quite concerned about whether they were going to miss the deadline. But the reality is when you've got a bigger EBITDA, actually, if you hold the practice for another month to 6 weeks, you can recover a lot of that anyway. So I guess in terms of should it be a motivation for sale, is if you're thinking, I want to retire in the next 18 months, then yes, maybe, because it will save you 40 grand in tax. But is it the difference between selling now and selling in 4 years' time? Probably not, because the difference is you're going to recover that all back in additional tax anyway. But if you make the decision that this year is your year and the £40,000 or changes to BADR do make an impact to you, again, I think most lawyers were saying is you need to plan early, because we were reasonably lucky. I think we only had 2 or 3 deals who didn't hit the required deadline of the 5th of April, but intended to and had to complete the following week and take the tax hit. But of course, the earlier you go to market, the earlier you agree a deal, the more likely you are to be able to achieve that deadline. Because a lot of people said, well, I left loads of time because I went to market in September. And yes, in real terms, sometimes you can go to market in September and then you can latterly sell within 6 months. But the issue is there was lots of other people all doing the same, and there's only so much legal capacity.
Well, it's legal capacity and also something's just outside of everybody's control. And the number one reason why deals didn't progress before then was probably down to leases, and third party landlords. It's sometimes, the bank will require certain lease protections and lengths of lease. And if simply you can't get hold of the landlord to complete in time, there's nothing that anybody can do.
No, well, and indeed we had one NHS local authority who just didn't release any of the variation notices, and the bank will not release the money without the variation notices. Now, legally, contractually, they had to, but no one's going to sue the NHS for loss of tax. And equally, it was a sheer capacity issue. Now, if those notices had gone in at the end of January to allow for the beginning of March, it would have been a substantially different story.
Yeah, and just touching business asset disposal relief, so it's on the gain. So if you, for argument's sake, bought the practice for 500 grand and you sold it for $1 million, that's 500 grand, so it's only based on the gain in between what you bought the practice for to what you sold it. In that scenario, you'd still have another 500k to potentially buy and sell another business, as long as business asset disposal relief doesn't change again, which, speaking to a lot of the economists, it probably will change in the future. But again, that's all theory at this stage.
Yeah, I mean, there's loads of conjecture of what may happen with tax law. I guess sort of in the wider economic climate, what other factors are going to impact this year? And of course, what was hoped was that we would see further reductions in interest rate. The jury's out now as to whether we're going to see them. Of course, with all the Trumpian economics that are having impacts across the world in various different sectors outside of dentistry, the aspiration to have a further reductions in interest rate this year are looking somewhat unlikely, because whilst the economy isn't growing as quickly as those would hope, what we also need to protect against is inflation. And of course, if you lower interest rates, arguably that can have a knock-on effect on inflation, and thus actually that might have a bit of a knock-on effect on the market. But if I'm honest, I don't think it will have a massive impact.
I think what we've got to realize is we're in a very cash-rich industry, and the banks out there are supporting 90% lending, so more and more the appetite from banks seemingly is increasing. You're getting more banks coming into the market as opposed to banks exiting the market. So that will drive competition for lending. Ultimately, there's a lot of cash-rich buyers out there, and that's been really validified in terms of some of the latest practices which we've launched and the amount of viewings actually per practice that we're managing to achieve.
Indeed. So 2025, the future's looking good. I'm not expecting any major shocks, but of course you never know what the autumn budget might hold. But if you are planning to be out by the end of the fiscal year, you need to do it soon.